All right now. All right, let's rock. All right. Let's get to it. What is up? What is up, everybody? Good morning, good morning, good morning. Super excited, super pumped up. And let me make sure that we are on here live, that you guys can hear me loud and clear. Do me a favor, if you guys can see my screen, if you can hear my voice, can you do me a favor and type in a 1 in the chat? Type that 1 in the chat. Type that 1 in the chat. You know, if you're watching the replay, do me a favor, type in replay, and best believe this morning's gonna be a great morning, because what I wanted to do is really hone in to everything that's been going on these last few weeks and really show you guys a very simplified system that's been working for me, been working for other people. And I really just wanted to go deep into this process. And I figured, I was actually recording a bunch of videos this morning, and I'm like, man, I got to record this video. So I figured I might as well just do it live with you guys and show you guys everything in terms of the tools that we have, do some real basic training in terms of what the markets consist of. Because what you're going to notice is with these tools, whether if it's the Pullback Pips indicator, whether if it's the US 30 Striker tool, right? Whether if it's our alert system that you're soon going to be learning about, they're all here to help you enhance your trading, get to the point of hitting your profits, seeing more consistency in the markets so you can live a better life, right? So let me actually, let me make sure you guys can hear me. Let me make sure you guys can see me before we get into the sauce. Do me a favor, type that 111 in the chat, please, right? So what I wanted to do is, a lot of people have been asking me about this pre-launch process that's been going on, because what we've been doing is actually allowing members to come in and really have everything at their disposal. I'm talking about having the right education, right? That literally goes from A to Z, breaking everything down, enhancing your technicals, learning more about really concise points of how you can become a better, more consistent trader, and also having the right training when it comes to these tools so you can maximize, right? So for everybody, if you haven't done so already, make sure, you guys really go into this content, because before we just maximize with the tools, we want to make sure we have the right training, right? You can't drive a Lamborghini if you don't know how to drive. You feeling me? So I want to make sure that what we do is, for everybody who's getting in, especially if you're watching this video, whether if it's on Facebook, whether if it's in the back office, the first thing that you always want to make sure that you're doing is learning the right things, applying yourself, applying that knowledge, right? And if you ever have any questions about anything that we discuss, best believe it's probably back here for you guys to review a video on, right? So aside from that, everybody should already be a little bit more familiar with trading the markets, whether if it's Forex, indices, commodities, cryptocurrency, stocks. It's all the same in terms of looking at how the market moves, identifying patterns, identifying opportunities to getting in, whether if you want to buy or obviously if you want to sell, right? Everybody understands that. So what I wanted to do today is really give you guys a very basic training, not even complex, not even intermediate. I'm talking about basic of the basic. Anybody can do this, right? And the first thing I want you guys just to be able to do is realize that there's different market conditions, right? Whether if you're trading Forex, whether if you're trading gold, right? You're going to have some markets that moves hundreds of pips or points. You're going to have markets, for example, let me just bring up a market that might be a little slower, like an AUD NZD, like a Euro Swiss. You know, these markets usually are a little choppy at times, right? You see the choppy, the consolidation. And what's crazy is throughout all of that time, it only moves, 25 pips, right? So you're going to see a lot of that happen where, look at that. You don't want to be stuck in those type of markets. You want to be able to go into the markets that you are maximizing these runs, right? And being able to catch these nice pushes, right? So what you're going to notice is when it comes to our training, it's going to help you whether if it's in the Forex or whether if it's in the indices. But specifically today, we're going to focus on just the indices and gold, right? I want to show you guys how some of this sauce really comes into play, because the first thing you want to be able to do is whenever you're trading is know your trend, right? Be able to identify, hey, what is the market doing? Is it going up? Is it going down? Now, for the purpose of this video, we're going to talk about the Striker tool. We're going to talk about the Pullback Pips indicator, right? We're going to definitely bring in the alerts and all that good stuff, because it all has a purpose in how I designed the platform, right? Because the first thing everybody needs to be able to understand is no matter what you're trading, the first thing you always want to know is the trend, right? If you're buying something, you want to buy it at the most lowest point, right? If you're selling something, wouldn't you want to sell it at a point that it has more value, right? So the first thing you're going to notice is we have our Pullback Pips indicator, right? I'm going to keep it real simple because we're keeping it real basic. Everyone's going to have access to this. If you don't already, shoot them the message. What you're going to notice is when you're in the seller's market, it's red. When you're in a bullish market, it's green. Simple, right? And you already know that since the market goes up, it goes down, it moves sideways, you're going to be able to identify, hey, if I'm looking to buy this market, I want to buy it at these low points, right? I want to buy it at points of interest that I know that I can push that market up into new levels, right? If I'm selling this market, I want to be able to sell it at a point where I'm taking it on down, right? And so forth, right? So what we're going to notice is that Pullback Pips indicator is going to be the first tool that's really going to simplify your trading, because it's already going to help you identify if you're looking at a bullish or a bearish market. Simple. If you're just getting started, bring out the Pullback Pips indicator. And if we're focusing on, NAS 100, US 30, remember, red represents bearish market, green represents bullish market. Red represents bearish market, green represents bullish market. So this tool is called the Pullback Pips indicator, specifically because once you have a bias, the best thing you need to be able to do is get in on a pullback, right? Let's look at Bitcoin real quick so everybody understands exactly what I mean. Because I remember having this conversation with a friend. It was crazy. They called me on the phone. They said, Anthony, I want to buy some Bitcoin. I talked to somebody. They said, I want to buy some Bitcoin. Hold up. Let me take off this indicator. Let me go to just like 30-minute. We can go to 30-minute hour, see what's going on, right? Matter of fact, because this was actually a few months ago, right? And it was at $60,000, right? Right? This is crazy because I don't even trade cryptocurrency. And look, this literally has been moving, right? But let's go back to right here, right? So we're having this conversation. Bitcoin's at about that 60K range. Boom. Just imagine if they would have bought at that price point, right? Just imagine the fear, the emotion, the loss that they're going through because they bought it in at the wrong time. Meanwhile, as the market is going down, people are crumbling. This is the opportunity to what? Accumulate that, right? People don't understand that. So what the pullback pips is going to allow you to do is already get that emotion out of you. You're not going to constantly be wanting to buy and sell a market because you already know if you're in a buyer's market, you're going to buy it at a specific point. If you're in a seller's market, you're going to sell it, well, technically get in for a sell at a specific point. So that's your pullback pips indicator. So let's just review something real quick, very basic stuff. If you're looking to get in, let me actually show you guys just some very basic setups real quick, because I got to make sure that everybody's on the same page, right? You already know red represents sell, green represents buy. So you already know the market is going to end up moving up, down, and sideways. This is an example of the market moving up. We got the market moving sideways, and then eventually it's going to start moving down. It doesn't necessarily need to be, but for the purpose of what we're talking about, up, down, sideways, 3 market conditions. Now, if you are trading an intraday trade, if you're trying to get in the market, get out with some profits, you want to make sure that you're in a buyer's market. You want to make sure that you're in a seller's market. And you want to avoid the consolidated sideways action at all costs. We're going to learn how to trade consolidation in the training, but you're going to notice eventually when you break out of consolidation, you're going to have a point of interest that the market breaks, pulls back to, and takes us down into a trend that opportunity moves in, right? So when you're selling the market, the pullbacks are key, right? When you're buying the market, the pullbacks are key. Now, the great thing is you can use pullbacks, and I got to keep it simple because we're doing just a basic. We're not going to talk about Fibonacci today, but I want you to just remember when the market breaks a level and pulls back to that level, oh, that's a beautiful pullback, right? If this level was all what? Supportive, and the market just happens to break through, that market right there is no longer going to be support. It's going to be rejection, which is going to allow you to push it on down, right? And let's just say hypothetically, right, we got this level that was what? Supportive over here. If the market just decides to magically break through it and comes back to it, man, it's just magical how this plays out. Guess what? Rejection. So remember that, because if you can remember that and you know that you're only going to be looking at the market when it's green, that's going up, and when it's red, when it's going down, let's keep it real. Let's keep it real to the T, because we're going to just grab this training. We're going to throw it in the back office for our tools and very basic training. So everybody at least comes in, right? So you already know your pullback's going to show you your green when you're bullish, your red when you're bearish. It's going to obviously only be red and green, but you're going to avoid the consolidation. So when we look at some examples now that you know that, when I say, hey, when the market was once supportive, right? If you see how it broke through that, pulls back to it, right? When you have your pullback pips indicator, you already know, hey, now that we're bearish, we're looking at those areas to sell. We're looking at those areas to sell. That's why I created the pullback pips indicator first. You can use it on Forex. You can use it on indices, right? And with these tools, I want to make sure that everybody understands. What we're going to review is, we already got the training. Right now, we're going to review the tools, some training. But I also want you guys to realize is the community, right? We're all here to help each other grow, right? You can literally go into the profits testimonials and see people posting profits because they're using these tools, right? They're using everything that we have to simplify and get to that next level, right? We're making sure to discuss it between one another. Bam, bam, bam. So tune in. Don't complicate this. A lot of people overcomplicate the process, right? So you see how we would have caught those sells, but now look at this buying example. You see all of this market that was once rejection, Once the market broke through, because we are in a buyer's market, trending wise, look what we would have done. Caught the pullback and taken that market up. So that's why I created the pullback pips indicator. Because if you're at least familiar with how the trend moves, right, you can at least understand I can get in on a pullback wherever that pullback is, right? Because I know that I'm in a seller's market, right? So when I catch that sell, I'm looking for pullback interest areas to take that market on down. So of course, now that we have our pullback pips indicator, we can now bring out our US 30 striker. Now, I'll be honest, the US 30 striker at first was for US 30, but I've noticed that it's really been working very well with other indices as well as gold, right? So that's why I have NAS 100 and gold up here, right? Because I've been seeing a lot of members doing great with US 30. We threw that bad boy on NAS 100 and it's working like a charm, right? So let me just show you how that bad boy works. If you already know that you're looking for sells because you're in a seller's market, the pullback pips is going to allow you to identify, hey, you need to look for this pullback entry. Hey, the striker is going to say, hey, it's literally like a jab. Every time you get a striker setup, that's going to come straight to your phone, mobile device. Sorry about that. Every time you guys get that alert, you should already be on alert, because when you're looking to trade, you're looking to do either one of two things. You're looking to either get in or get out if you're actively in a trade, right? So you're looking to get in a trade, or you're looking to find a better entry for that trade. That's only two things. So if you know that you're looking to sell, you already know, hey, condition pullback. I know where to look for my pullback entries at. Past support now turns into rejection. I already know if I got the sell, I'm looking for that opportunity of a pullback, right? You can use the striker tool as a mechanism to already put you in the game. Or I know I have members who are literally taking those same takes, the setups. So like, for example, we got the sell. That bad boy ends up moving over 129 points, 150 points, right? We literally got the next setup. Boom, that comes in. Right? So long story short, when you got the striker that's coming in and you got your pullback pips indicator, now you already know, hey, to look out for that trade. The trade is coming in. I'm already in the right market condition. So you already know. It's simple. It's not overcomplicated. Hopefully you guys understand. Put the training in there and you got this, A1. So right now, if you notice, literally the same scenarios. You would have caught the sells. You would have caught the buys, right? You would have caught these nice sells. Let's go. This is US 30. Let's do the same thing on NAS 100 real quick, so you guys understand. If you're trading during the right time with the right tools, right, you're already going to be in the game to know when to buy and when to sell, when to buy, right, and when to sell. But I realized, I understand how people work. Every time they see the setup, they want to get in the setup. So I realized, and I told myself, man, if people can't find the pullback, because people, I know sometimes a little knowledge they get upset about, but I say, man, if you're gonna buy something, right? If you're gonna buy something, identify that a pullback or a retracement is a better opportunity to buy that, right? If you're gonna sell something, and it's moving, a pullback is a better opportunity to continue that. But I understood sometimes people won't, they won't comprehend it. All right, let's just look at some other examples. When you get the setup, a pullback is just a better opportunity for you to what? Buy it. A pullback is just a better opportunity for you to what? Buy it. Or if you can remember that, oh man, you're gonna be moving. So let's look at another day. Let's just go to another day during New York session, because this was, I believe, Friday. So let's just go to another day during New York session. When you're in a buyer's market, look at that. Look at that. Buyers, 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 buyers. You're only looking to buy the market, right? So when that striker is telling you to only look for buys, you already know, hey, the pullback is the best opportunity. And it's been working. I'm loving it. I'm loving it. Everybody who's been posting profits inside the Discord, these are the exact same tools that they're using. They're using the striker, right? They're using the pullback pips indicator, And best believe now they're going to be using some other sauce as well that's going to help confirm, because I couldn't wait. I got to put it into beta. I got to put it into the field. I've been seeing some great results, but now I realized everybody's so busy that they don't have a lot of time. They don't have time to trade. As crazy as it sounds, they want to be a trader, but they don't have time. I say, listen, use this during London session, use this during New York session, avoid Asian session. And next thing you know, they're only trading Asian session. I'm telling you, don't use it. Take time with your family, right? Sleep, rest. So let's talk about the alerts. The alerts are going to alert us when to buy, when to sell. But if you know that you are in a buyer's market, guess what you're going to do? You're only going to look for those buying setups. See, I'm going to allow our members access to this Sunday. And I wanted to make this training right now so I can put it in the back office, right? When you already know, when you're trading during New York session, and I put the time there, but I know some people are going to change the times. We got a little bit during London, right into New York, right? This is going to be real simple process. Let me know if this works. All right? Let me know if this works. When you're in a seller's market, the only thing you want to do is sell. When you're in the buyer's market, the only thing you want to do is buy. This is the only time, right now, is the only time you're going to change the pullback pips, because this is more automated. A lot of people wanted the manual side of things to get enhanced. Now we got the automated side of things to get enhanced. So what you're going to do is you're going to put it on your chart, because now we're focused on, we already have a system that's going to tell us the trend, pullback pips, right? If you have your striker up, you already know the striker is already going to alert you when to look for potential entries or potential pullbacks, right? That's it. Potential entries, potential pullbacks. Now we're going to have our alert system that everyone's going to have access to, that's going to allow you when to get into the market if you do not know what a pullback is, right? And we're going to do some magic with it. We're going to do some back testing, because it's only going to alert you at the close of that candle. At the open of the next candle, it's going to say, hey, you should already be in this sell. Mobile device alert notification. Boom. Right? So let's just look at some examples. Let's go. All right. Let's start off New York session, 8:30, 9 o'clock. I usually tell everybody let's start looking at some opportunities 9:30 once you get that New York session open. Right? All right, let's make some magic. When you're trading, let's go right here. When you're trading, you always want to be looking at what the market is doing, identifying your lows, identifying any areas that were broken. You already have the tools that are helping you say, hey, we're in a bearish market. Only look for sells, right? Like, for example, this sell, shoot, I'd probably take it. What would I do? I'd place my stop loss slightly above, keep that bad boy minimal. Right? You notice that bad boy ends up getting stopped. That's fine. As we turn into a bullish market, we get our buyers set up. You know what I'm going to do? I'm going to take my buy. Because if we're in a buyer's market, right, and this is going to tell you when to buy, right? And I don't want to say when to buy, because I know all of these people are just going to start going crazy. But technically, you'll see how the magic works. And we are in a buyer's market. I already know, look what happened. The market broke this level. Now we are moving to the upside, right? We're pushing this bad boy easily, 1-to-1, 2-to-1. In this case, it easily pushes 120 points. I'll be honest, at 100, I would have secured the bag just to get out of my loss and still be up. Right? We get this buy setup that comes in. I already need to mentally realize that the market has already moved 100 points. If I'm going to get in, I need to A, take it either to structure level, right? B, either minimize my risk, just because you got to realize you already would have been pushing to the upside. Long story short, minimal loss, right? So as this bad boy prepares, let's just boom. We need to always be marking up our chart, identifying our zones, and visualizing what the market's going to do. We're in a sell. Guess what we're looking for? You see how the market's breaking these zones? I'm definitely going to be looking for my next seller setup. Right there, I don't like that. I don't like that. Why? Because that's a supportive zone. Right? So let's check this out. Let's see what we can do. Only time I look for that sell, you see, we got some good sells here, but we got to realize something, right? Give me some. You got to realize something. We're in a consolidated market. You would have known that by looking at what's happening. We got this resistance. We got this supportive zone. It's just bouncing. For me, honestly, if I'm in the right time, the right place, I know it's going to start showing me rejection. Yeah, we got the sell that came out. Pullback Pips is telling me sell, but I just want to see some rejection. Okay, I like that rejection. If I'm looking to enter this, right, I'm going to already look at, hey, we came in here. It's only a few points off. My stop loss doesn't need to be huge. We can place it possibly 40 points. My first area I'm going to have to take it to is what? Structure, right? You see, I got a little bit more serious because I'm trying to show you guys the sauce, educate, but you got to get in the game. We're trading right now, right? We want this market to what? Boom, it already moved 23 points. I wanted to break that structure, right? Boom, it broke that structure. Target one, that's about 40 points, hit. I said first level, 1-to-1. Next level I'd take it to is about 147 points, next level of structure. At the point I hit 1-to-1, I can minimize my risk. I could do, instead of 40 points, we do 20 points. Let's see what this bad boy wants to do. Okay, it's consolidating. Boom. Look at that. Let me show you what just happened. It consolidated, stop loss never gets hit. It's breaking that structure. We got a sell setup that came in. That was pretty valid. I like that sell setup that came in. Why? Because if I'm selling the market, right, if I'm getting these sell setups that are coming in, you know, it's not just, hey, let me just get in on every buy that's on the buyer's market or sell that's in the seller's market. No, you already know now we're selling, right? If you already know now we're selling, what do you think this market did here? All of this, you see this level? It was what? Once supportive. Now it's what? Resistance. I don't know. Hopefully this is making sense, right? We saw the striker come in, so you already know. Let's look for some pullbacks, right? Striker came in, started moving. Heck yeah. Right? Striker came in. Guess what? People are looking to sell, and we're getting alerts that are telling us. So we're able to push that market down where? Ooh, I'm done. Right? If you held that first trade, great. If you came into the second trade with even better opportunity at a nice 40-point stop, pushing that bad boy onto the next target, guess what? Secure that bag. Right? I'm done right there. You see how I hit that target, 100 points? I am done. Look what time it is. It's 1 o'clock. I'm clocked out. I'm clocked out. Let me just show you guys why I'm clocked out. Because I just used a very basic system to, I lost once, I lost twice, right? I realized, hey, if we're going to take our losses, but when we win, we need to win bigger. 100 points, 150 points, 100 points, right? And that's how we call this session. Let me know if that makes sense. Let me know if that makes sense. For some reason, I can't see you guys' comments, but it's fine. Right? So hopefully that makes sense. This was US 30. So what we're going to do is I want to just take a moment and I just want to talk about some key setups. Because you already can see with the right tools, just some right basic training, using it at the right time, you can get some damage done. Right? So since this is I'm just gonna use this recording, I actually do want to go into some key stuff. So everybody who's watching, if you guys aren't in the pre-launch yet, shoot me a message. Let's get you in the pre-launch, right? So you can get your lifetime access, not your monthly, not your annual, your lifetime access. And as we continue to innovate and grow and develop and literally, I remember at one point the striker, everybody was like, listen, Anthony, the striker is working great, but I needed to give me the alert. And I said, let's get the alert. So I'm here to help you guys grow and elevate, right? So let's actually go to Nas 100. Let's do some training. What are some things that we can do when we're trading to maximize these tools? The first thing you need to realize is it's not 100%, right? The striker is great. The striker will allow you when to sell, when to buy, right? But it is not 100%. If we're trading during the right time, it helps, right? But don't trade when it's the wrong time, right? Don't trade when the market's just moving sideways. Don't trade when the market is just moving, sideways. You don't want to be dealing with that. Literally, this is the time that I'm sleeping. Right here, this is the time I'm sleeping. So the first thing you got to realize is when you're using any tools that are here to help you enhance your trading, you're not going to be 100%. The tools help you to be 50, 60, 70, 80, more accurate. So the first thing you got to realize is when we're looking at the chart, we always need to know the trend. We always need to know the trend. What I mean by trend is know your highs, know your lows. What do I mean by that? If you're looking at this market, right? What are some important things you want to know about this market? Because you already know if you're trading Nas 100, US 30, it's easily going to move 100 points up, 100 points down, right? And so that's why I traded on the 1 minute, because some people can't even hold 100 points because of the emotion, because of the over leveraging. So long story short, no matter the chart, you always need to understand the market. The reason that technical trading is great is because we have price, right? Price allows us to identify these high points, which clearly right now are serving as resistance, right? And then, of course, it's going to allow us to understand these low points, which are serving as support. Now, sometimes people overcomplicate this, just because if you go into your pullback pips indicator, you do have that option, all right? The pullback pips indicator does grab your structure, right? So yes, if you notice, if you have it, it's there. But understand how this works. So let's just take that off. When you identify your highs and your lows, this helps you understand two things. The first thing it's going to do is going to start helping you see what the market is doing. Is it going higher, right? Because if you don't understand something, these low points, every time you're seeing these structure levels, it's gradually going lower. That's why every time you probably saw that it came up, it made a drastic move down. And then now you're seeing that these levels are gradually going higher. So if you want to actually color code it, I like to do blue for support, just because I'm looking to buy it. Favorite color, you already know. But and red for resistance, because for some reason I sell it, right? It's very simple. So as this market is moving, the reason that you want to understand these levels is because they help you reference. If the market is not going under it, and you're seeing that it's gradually structure is going higher, now you know that I'm looking to buy it into these levels. You already know that, hey, I'm not going to go and try to take it all the way up here, because before it goes up there, it needs to touch this level, this level, this level, which can all be possible resistance, right? So the first thing you always got to know is if you identify these highs and these lows, they already put you one step ahead of seeing where you can target your market. Target. We're going to work on entries and we're going to work on exits, right? Especially with these tools. 1 second. So once you identify your highs and lows, what you're going to start noticing is the market is possibly always showing some type of, let me at least move. It's going up. It's going higher. It's going higher, right? So if this market is a potential uptrend, it's going to want to either pull back but we're looking to go higher, at least back to these highs. What a lot of people don't understand is the market usually creates some type of move after it hits a higher low, right? So like, for example, here, I'll just delete all this. So like, for example, if you look at this level, the market's holding. And then next thing you know, the market sweeps it, right? I talk about that often, where the market, look, you see this low, the market came, it swept the low, and now it's going to make an aggressive move. It doesn't need to be hundreds of thousands of pips, but all it needs to do is now take highs or take lows. What you're going to notice is, for example, you see this level, there's probably going to be some type of traction around this level, right? As the market came up, it literally hit it and pulled back aggressively, right? But what you're noticing is you came from this reaction point, taking it up, right? You came from this reaction point, taking it up. Where? We're possibly going to look to hit some targets of structure of these highs that need to get tested. Hopefully that makes sense. Because if you can understand that, you already know the market's looking to go up. But as it's going up, it's always going to do what? Pull back, retrace, right? So hopefully I'm not moving too fast. But this is all in the training. You guys should understand this. So now that we got our pullback pips indicator, you already know when it comes to the pullback, it's very simple. You obviously, when you pull up the indicator, it looks exactly like this. The first thing you're going to notice are these levels of structure, right? Those are those highs and those lows that I'm talking about. This is exactly what I'm talking about right here. Boom. The reason that I have this indicator like this is because if you're manually trading, you want to know where these highs and lows are. Because once the market breaks it, look, you see how it broke it? You already knew that you were suddenly in this potential, even if it was a short moment, uptrend. So once it broke this, you already know that the next level you're looking to take it to is structure, structure, and structure. Even if it's that short move, best believe I would have been okay with securing, my 50 points, minimizing my risk, and taking that bad boy up, right? If it continues to go on up, hey, good job, great trade. Learn how to trail the stop, but at least you know where these interest points are at, right? The great thing is with your pullback pips indicator, not only do you have those structure levels that will help you see the market, but you will obviously see the potential trend in the market. Now, when it comes to this, I keep it real simple. If you want to see the trend, it's not just great about seeing the trend in the current market. You want to see the overall trend on your bigger markets, right? So go one time frame ahead, right? Go 2 time frames ahead. If you're on the minute time frame, use your pullback pips. Other than the chart, use it on the 2 minute, the 3 minute. You don't need to go to the 20 minute, to the 30 minute. No, just 2 time frame ahead, max, right? So if you're trading Forex on the 15 minute, you can use it on the hour, the 2 hour, right? 30 minute, the hour, you know what I'm saying, 2 time frames. So we're on the 2 minute, right? And this helps because now you know, hey, I'm in this bullish market. Hey, the market just broke that structure. Let's buy it, right? So always know those highs and always know those lows, right? Let me show you guys another example of how it would have worked, because that's gonna help. That's what's gonna help you see where the market is at, right? For example, you see these levels, these are all structure levels for you to target. But one thing's for sure is this resistance is there. And ever since then, the market has not gone higher. If the market is high and mighty going to be bullish, it needs to break highs, right? All it needs to do is come up and test it and then react, right? So let's just see this market. You're going to notice, boom, we're eventually bearish. If we're bearish, right, no matter if that's short-term, long-term, you already know where are you looking to target. You already know if this market just broke this structure, key area 1 right here, boom. Key area 2, boom. Key area 3, bang. Now I know this is going to be a huge trade, but best believe if I'm looking to come in, where am I going to place my stop loss? Does it need to be all the way up here? No. Well, it can if you want. Small risk, that's fine. If the reward makes sense, right? And you're feeling this swing, cool. But I'll be honest, I'm not usually doing 74 points. I'm usually keeping it 40 points, 50 points max, right? I don't need to overdo it because I know that if I'm looking at the striker, if I'm looking at the alerts coming in, we should easily be moving 1 to 1, 2 to 1, and then you trail if necessary, right? So let's just look at this setup that would have came in. Bing, but the boom. Let's just look at these structure levels real quick. And as it's moving, this is what's important. And a lot of people don't understand. Just because you're in a trade doesn't mean you gotta be in the trade. You can get out of the trade. If you're not feeling it, exit. But if you notice, look what it just did. You see how it broke that structure level? That's just telling you that the momentum is still there, right? We're still looking to push that bad boy into some targets. So if you understand those little concepts, you could still find your other opportunities to get in if you missed out, right? Bada bing, bada boom. So that's how you use structure levels. That's how you use highs and lows. What you got to realize is when the market reaches highs and lows, look what it's doing. It likes to just stay still. Look. Let me show you something. I hope this is important. So if you understand structure, highs and lows, you use them for entries, you use them for exits, right? Pullback pips is already telling you one step ahead. Know when to exit, because you don't want to be stuck in this market that's just moving sideways. It's okay to actually secure the profit and move and continue your day. You don't need to be trading, right? And this was literally less than an hour of a trade, right? This was actually right during that New York session flow. So the first thing we got is understanding highs and lows, understanding them for where we could take them, and also how we could use them as a reference. So the next thing I want you to know is, now that you know highs and lows, right? I want you to understand that if you're selling, all the market wants to do is just go lower, lower, lower. It doesn't need to be hundreds of thousands of pips, but it just wants to go lower. If you're buying it, the market just wants to casually go higher. And if you know some of these points that it may want to go to, it's going to help. So like, for example, you see what this just did? It came into this level, and this is why it's important to see what structure is, because you can use them for structure, but you can also use them for zones of interest. You already got your sells down here, but look, we're interested in what the market wants to do at this point, right? And that's why as you're manually trading, you can draw all of these things out and identify it, because for now, what is this market doing? If it's consolidating, look, it's actually breaking higher. Pullback Pips just said we're buying it. Hold up. If I'm looking to buy this market, you see this level that just got broken? That was past resistance. That means if I actually want to buy it, I could probably buy it here. If it comes back, I could maybe have a small risk. I could now probably take it to my first level of interest, if that's the setup, right? That's just based off structure. That's based off of using these levels and seeing, okay, if I miss my entry there and that's my next entry, I need to make sure that this area, if I'm looking to get in from this, I got to make sure that my stop loss is what? Under, I said max 50, right? And as long as it starts making some sense, I can make that trade. You know, you take that trade, and even if you miss the first one, you do your thing, right? Bam. Let's go. Let's take it to some structure. Boom, it hit that first level of structure. If you know, how many points would have that been? Boom, I would have already hit a nice 1-to-1, secure the bag. Move that stop loss, make it break even. If you want to trail, you trail. The great thing is that the pullback pips is still saying bullish. So as long as it's saying we're still bullish, I would have already been out just because it turned bearish, right? So that's the first thing we always got to understand, highs and lows. Use that with the pullback pips. Now, the next thing you always got to understand is your pullback, right? So let's just go, we're on NAS 100. Let's just go back to US 30. You're going to see me jump just between those two, because you're going to notice this happens in all market conditions, right? Hopefully we're here. So if you understand your structure, if you understand your highs and lows, and you understand your trend, that's all you need. Right? Because look, I can show you right here. You see what the market's doing? It just touched, but it went higher. The pullback, it went higher. Ooh, that's telling me we're in a buyer's market. The pullback, it went higher. The pullback goes higher, right? Long story short, you see what happens? The same thing for the bearish. It goes lower. All it needs to do is just a little inch. Because once it shows that, it's going to want to pull back, go lower, right? Now that it went lower, it doesn't need to do anything except pull back. Because as long as it just goes a little bit, we already know we're in that seller's market. When would you have known that you're in the seller's market there? Honestly, already once it not only broke once, twice, if you already didn't know that this would have been a pullback or this would have been a pullback, you're out the race. But this would have been another opportunity. All right. And if you had your pullback pips indicator, you would have already been aware. Boom. You see what I'm saying? Use the tools, right? So let's just look at, we're going to do one last review on structure, and then we're going to do, we're going to move into finding the pullback, right? Understanding how can you get a better pullback entry, right? Rather than just relying on your striker tool that's going to say, hey, potential thing, one of two things could happen here. Entry or find the pullback, right? Entry or find the pullback. And if you at least know how the market is looking, you'll be able to define better what you're looking at, right? Because you already know, ooh, all of this support was broken. If I got a setup right here, I could place my stop loss right there, you know, and take that bad boy down. If we're looking to break this bad boy, my stop loss could be up here. We're taking it down, all right? Remember the trend. Trend is first, highs and lows and structures second, and now we're gonna be able to identify what is a good pullback. And this right now, I'm going to give you guys some sauce. So for the people who are on here, you're getting the sauce. A pullback is always going to be dependent on one thing, an impulse. For example, if the market goes up, you do not buy it. The best thing you want to be able to at least do is buy it at a discounted price, wherever that is. Because if you at least buy it anywhere in this box, it's better than buying it all the way up here. Hopefully that makes enough sense for everybody. And everybody understands that. Great. Usually what you'll notice is a lot of the times this candle will be a strong, momentous candle, whether if it's a candle or a trend, and the market will eventually want to come in and pull back. So what you can always do is now you're going to bring out your Fibonacci. If you don't know what Fibonacci is, go to your Fibonacci training. There's 3 great Fibonacci retracements, extensions, entries, and exits. This is going to be a little bit of an entries and exits review. But what you're going to do is whenever you have an impulse, you need to bring out your Fibonacci. And you're going to notice, and this is already me giving you guys the sauce, that there's only 3 important levels you have. Right? And if you can identify those levels on the pullback, you are already going to have a better opportunity. Why? Because if you are buying this market and you get in down here, wherever that is, at your optimal entry, you will easily be able to do one of two things. If you are buying, it's going to go what? Right back into structure, right back to where it all started. But you also know that you'll be able to go even higher. Hopefully that made enough sense for everybody. So we're going to use that exact analogy, all right? And let's just look at some examples, because whenever the first thing you always need is a trend, right? All you need is a trend. All you need is a trend, right? I know we had some good, what time is this? Let's go into New York session right here. Cool. All right. So for example, right here, you see this? This is momentum. Boom. If you want to sell something, if you got told that you're in a seller's market right here, I would say, man, find a better pullback somewhere, right? But since you knew, right, this is what we're looking at. What you need to do is you grab your high, you grab your low, because you already know the market's not going to go any lower, and you're going to find yourself one better entry at the entry area. That's what. That's it. If you miss it, you miss it. But you're going to understand this concept. If you can find better pullbacks, you can always find better opportunities. You see how it pulled back? Wherever that was, whether if it was the 50, the 38.2, the 70 fake out, right? You'll learn all about those. But you already know you're going to place your stop loss above, and you're going to do what? The first level you're possibly going to take it to is right back into structure, right? Usually that's an easy 1-to-1, right? This case is a 1.7 to 1. If I would have get about 40 points, you know, almost would have hit a 2-to-1. Long story short, find the pullback. Because you see, if it's going to go, it's going to go. especially when it comes to the indices. If US 30 breaks a level of structure, I can almost put it on things that it's going to move 20 to 50 points, just a quick impulse. And then it's going to maybe want to pull back, right? By that time, you would have already grabbed your 1-to-1, your whatever it was, and boom, that's your trade. You're not in here to stay in there. You're in here to grab your profits, secure the bag, find the next setup, right? Hopefully that makes sense. So as this market is moving, let's just say, okay, you see how it's pulling back? You already know this is the lowest point. You already know that we came from interest 1 of impulse, and then of course we started it all interest 2. So you're going to grab your Fibonacci tool, and you're going to identify those zones based off of that impulse, right? And now you know that if the market, and this is already saying, hey, we created an impulse, always look for a pullback. The market would be best to get it in if you're looking to sell at one of these interest points, right? Look for it to start rejecting at one of those interest points. I'm still interested. Why? Because it hit this interest point, but I'm still interested to see what's happening there. If it's going to be a seller, it's going to want to break through. It's consolidated, boom, sold, right? If you're interested, even if you're selling it there, we're going to place just some, I don't like that 80-point stop. I usually just keep it real at the 50. 1-to-1 would have already been 80 to 80. It is what it is, right? Ooh, stopped out. All right. And that's the thing. It'll happen. You'll get stopped out. And this was definitely one of those moments where, hey, stop this out, took that high, and move. Let's keep going. Let's keep going. Let's look for some more impulse. So as this market moves, when I'm looking for a pullback, well, that was probably 9:30. Yeah, 9:30 right there. When I'm looking for a pullback, let's just let this bad boy marinate. I'm over here trying to see if it turns bearish. Okay, boom. So like, for example, once we start seeing that the market's creating an impulse, let's see if it can create an impulse and break. All right, boom. We can bring out our fibs and grab the high and grab the low. And if we're looking to sell, we already have this sweet spot right there that we're looking to sell, right? We want the market to pull back into this interest area. Rather than selling at the low, pull back to this interest area. We have these references of rejection where we can possibly look to minimize that risk and maximize into some structure areas, as long as we're what? Selling that market, right? So that's all we got to be able to do. Find those pullbacks. Now, if the market doesn't pull back necessarily, as it continues creating those lows, if it does want to pull back to some opportunity, we just whip out our fibs. Now this bad boy just ended up just taking off without us. I created this low right here and hit that retracement, went lower. So sometimes you'll catch them, sometimes you won't, but at least being able to be more on a pullback entry will help. So whenever you see impulse, think, where can I get my better entry pullback, right? That is it. That is it. So like, for example, right here, if you see that the market's creating an impulse right here, boom, you already know. Let me pull back. Let me whip out my fibs, and I'm only looking at an interest area between that 38 and the 707. Bang. Once you have that reaction, you'll be able to see it ease into some other setups, right? So like, for example, let's just look at some more momentum real quick. Like, this is actually not the time that I trade. Let's go over here. All right. All right, so let's go into the New York session. So for example, right here, if you notice, right when we started that session, as the market opens right here, 9:30, we probably did get a pullback striker setup Oh, it came in right over here. But as that market pulled back, boom, you could have easily grabbed your low, your high, and looked for interest areas at this market, right? To push that bad boy up. As you can see, like right here, once we got that buy set up, you already know if it's too high, you don't need to buy it. All you need to look for is now your pullback area, because you know it's going to come in between these points, right? And if you're able to do that, you know that the market's going to want to do two things. If it's in a bullish market, you got the striker set up. It's going to first want to go here, and then it's going to slightly want to go a little higher, right? That's it. So if you got your pullback, all right, you already know you're going to place your stops under where the market has no business being, hit that 1-to-1, which is usually there the first time, and then extend that market. Do your thing. That right there is a good setup, right? Right here is a little after 12, and then right here. This is a good one right here. You notice the market, it moves. So already at this point, once it creates this low, you're always asking yourself, where's the best pullback that I can get? You know, as you identify these high points, use them as your retracements. Right here, right? We already started. It came into our interest area there. Right there, it would have done the same. And then this would have been the most recent swing where it held down. If you're able to get in there, best believe, look, your stop loss is only going to be, even if you came in at the worst scenario, your stop loss is still what, 30 points. Still minimal. Look, it has no business being 80, 100. No, keep it minimal. So now we can push that bad boy on down. Easily where? Back into structure and a little bit lower if it wants, right? Once it hits that structure and I go 1-to-1, you can move that stop loss, make it less, right? Just because that extra push is usually what you need, but realize that it does need to pull back. Why does it need to pull back? Because it just broke momentum, right? Let's look at this example right here. Even though the market went up, it pulled back, it went up. If you always identify the momentum, you could find a better entry, right? And that's all we're looking at, a pullback entry. Whenever you see momentum, whenever you're in a bullish market, always think to yourself, where can I see pullback? Where can I see a better entry, right? Like for example, if you look at this area right here and you see that it created momentum, right? You're always going to ask yourself, I'm not going to buy it up there. If anything, where's the better entry, right? Even if I just want to slightly just take it higher, right? Because you're going to notice as the market goes up, that's all it just wants to do. Break just a little higher, right? If you already knew that you're entering here, you're exiting there, look, you avoid a little consolidation. Then it broke a little higher, right? So these are just examples that when you're in the pullback market, when you see that striker setup, you know what you're looking for, right? Now these were probably already here. Let's go to another day. Oh, like this one. This one's probably interesting. Like whenever there was so much momentum, this was already closing the session, but whenever there was a lot of momentum, grab your fibs and identify that. Because rather than getting in down here, I'd rather get in on a retracement, right? So that was just an example, but that was actually once the market was closing, so I wouldn't have been doing much with that. But let's look at this right here. Oh, this is actually pretty saucy. There was news this day at 2 o'clock, right? So you are going to notice that's why it's so shaky. But I do want you guys to just think about a pullback scenario. If you know that the market's creating momentum, right? This is what I mean. If the market's doing this, it's creating momentum. You grab your fibs from the low to the high, right? You already got your area of interest. Now, it's not just about having that area of interest, but of course, seeing what's happening in the price, right? Seeing that if you know that these key levels are here, what is the market doing there, right? If you don't see it, I'm going to show you what the market really just did. Right before that, right here, this was 2 o'clock right here. Boom, this was the news. It spiked up, it spiked down. It spiked up, it spiked down, and then took off. That's why I never trade news. Everybody says, Anthony, what do you do with news? I wait. Because news is so unpredictable, it's just causing emotion, right? But if you at least know that you're in this area of interest to buy the market, you're seeing that it's sweeping these levels. It's just a matter of time before what? Takes on up, all right? Take it on up. And just finding that better opportunity allows you to what? Maximize on that bullish push on up. But I want you to also see something like this right here. As it goes up, just because it goes up, this is where you secure the back. Realize a pullback is always great. So if you grab that impulse, let's see if it pulled back to our area of interest between that 38.2 and the 707. Yes, right? So rather than trying to get in up here, eventually you would have gotten in down here. And what would you have done? Looked at some structure, looked at some price, saying, okay, if I'm going to get in here, I probably got to place my stop loss and then take it on up, right? That's just based on retracements, always identifying the retracement, the pullback, right? Okay, let's just go back real quick and see if we can find some more pullbacks. That one's really just like, okay, let's go to us. What time is this? All right, here we go. All right, so like for example, whenever you got momentum, always think pullback. Whenever you got momentum, always think pullback. So as this market is showing you momentum, always think pullback. As it creates momentum, always think pullback, right? So like for example, as this market moved down, it eventually hit this low and started what? Pulling back. This is the only area of interest you want to keep in mind if you want to continue that market on down, right? You see how I created this low? Well, if you want, you can still reference that same high, the same low, and you're going to have your area of interest, right? Not only that, but if you grab that most recent impulse right here, boom, you're going to have that area of interest. Now, as this market, as you identify it, you're still going to look at market conditions, see what's happening. As this market pulls back, where's the best place to sell it, right? Well, first let's look at the price. We got past support, right? So the better we could find an area of interest to sell it at, the better we can get into that market. And even if we got to place our stop loss above the mess, that's still only 40 points. Guess where is the first place I'm going to take it to? Structure, and then a little more. Because once it breaks structure, it's usually going to want to create a little impulse because it's trapping all those people, right? That's already a nice 68-point rush. Secure that bag. Keep it moving, right? If you notice, momentum, you would have had an area of interest only to get in at. Obviously, you can look at price, look at wicks, look at structure, see where potential sweeps can lie, right? But you're going to take it where? Back into structure. Boom, right? Once it hits that structure, that's why it wants to do a different move. So that's always how you're going to deal with it. Pullback. Always think pullback. Even if you missed out, pullback, right? Like right here, we got this low, we got this high. Well, guess what? Not only do I got my pullback reference, I'm looking at price. I'm looking at, hey, where's the past support? Where's the past resistance? Because if I can see that this area was resistance and it broke through, oh, guess what? That just minimized the better entry for me to know that I'm taking it up. And it's not just about catching your entry. It's about realizing you just caught the opportunity where if it's going to go higher, it doesn't need to go any lower than your entry, right? Because as long as it went higher, it's just going to want to pull back, but it has no business being lower. So you catch good runs to take them on up. Always think retracement, right? And then, of course, when you put that all together, it's not that complicated. So let's just go through some examples. We got the striker coming in. You could have saw this nice pullback opportunity, right? Momentum, pullback. You got some nice pushes. If you would have caught some nice regular sells, we would have been great as well, right? So always, whenever I'm in a bearish market, whip out the pullback and have that zone, right? Because once I see that, I know, hey, if I'm looking to sell, honestly, I don't want to sell it higher than that zone because that's just going to say momentum might want to keep going higher, right? That's pretty much all I'm telling myself. And once I do that, I'm finding, okay, if I find that entry, my stops are above, let's take that bad boy on down, right? Like this right here, this buy was on smooth. Like if I would have caught this buy, you think I would have took these other buys? Heck nah. Because I would have already been in that trade. I would have already pushed well over 100. Look at that. It moves 150 points. And if I was only risking 20, 30 points, 40 points, I'm done for the day, right? So by the time the market already moves 150 points, evaluate what's happening, right? Understand that there's highs and lows that it needs to react off of, right? Right here, look at this. Even though we caught a nice entry right here for the sell, realize that if we're in a bearish market, the pullback is always the best, right? Look at the pullback opportunity, but realize we have systems that are here to alert you to help you identify that. And then, of course, seeing that sell right after the pullback, place the stop loss above it. Let's take it on down. I don't need to hold it if I already made it, right? You feel me? So, like for example, if you would have gotten in on that sell, I don't have an 80-point stop. I literally am going to keep it minimal because this would have already been the reaction. If it moves 100 points, I'm done. Secure the bag. See ya. What's next for US 30? I don't know because I'm not trading, right? So that's all you're doing. So like, for example, right over here, if you're trading right, if you caught that trade during that New York session and you told yourself, hey, we caught the buy, boom, we broke that level of structure, bang, and we got some nice entries to take it on up, it's game over, right? Some people would have already been in that entry right there from 556 to 630, less than 30 minutes. You would have already caught your 100 points probably. Yep. And guess what? Your risk would have been so minimal because you put it below that low that you would have already did a 6-1 and already called it game over before the market even opened. You know what I'm saying? So that's what we're gonna do. What we need to do. Just keep it simple. Take your losses where you lose, and take your winners and exceed. All right. So let's just go to this prior day. Based off of what we just learned, let's try to at least put it together. All right. Let's look at some examples and let's just put it together. Hopefully you guys are still on here with me. I know we got a few people on. That's what it's all about. Just that few, because you're gonna grab a tip that's gonna help you elevate, take things to that next level. Right? So like for example, right here, you see if we're in a bullish market, we're only looking for buys, but that's fine. If you know that you are in a bullish market, wouldn't you grab your momentum and at least have an idea of where the market can retrace to if it wants to remain bullish? I would. I hope you would too. Because at least you know if the market's going to be buying, it's literally going to stay above this zone. Once it starts breaking under it, I know I'm going to have to consider that it's going to want to come lower. And by the time that happens, it's probably going to be another setup. But since that did not happen, I draw my zone, and I know that when the market creates momentum, it casually wants to pull back, right? So if this was our area of that 382 between the 707, realize that as that market's pulling back, it's just a matter of time, right? It breaks bullish and we get the buy set up right here. Consider that it's wanting to go up. And with that consideration that it wants to go up, realize that all of this, and I'm going to show you a playback so you guys see that in reality, when you're in the game, it makes it a lot more easier when you have all the tools and everything. Because let's look at this example back again. You see these structure areas? All of these are going to serve as targets. You see these structure areas? Targets, right? So far, when you identify your zones, and this is what's important, zones are key because it's not just about a specific point, but an area of reference, right? When you got your zones, and especially, I like that one, you start to see what the market's doing, right? as it's moving, as it's marinating. So once you color code them and you start to see them, you see what's happening here? All of this was once resistance. If the market starts breaking all of this to the upside, it already broke here. If it continues breaking here, you're just going to reference those areas to buy it off of. All right? That's all you're going to do. That's all you're going to do. Reference those areas that it broke to just simply buy it off of. You see how it literally right here, what happened? It hit that area and it moved on up to the next. Look at that, right back into that high. So that's what we're going to be doing. So you already know, buy setup comes in. Literally would have just slaughtered this setup. Could have put a nice 30-pointer. Ends up going to the next level of structure. Does it? Well, let's see. There we go. It sure does. And if you remember what I was saying, if whenever you catch a pullback, that's the best entry. Because if you see that this market's going up, ready? Boom. I was waiting for some type of pullback right when it went higher. I'm like, oh, it's going to probably pull back against me. Maybe, hopefully it doesn't take me out of my entry. But that pullback is actually all sauce. Because you would have looked only to buy it off of this level, right? So this is where it gets, where you put it all together. It's not as complicated as you think. Sunday, I'm going to have the alert set up for the members. And aside from that, family, let's just continue to rock, you know, as we continue to prepare for this launch. It's just a matter of getting everybody set up properly, continuing these testimonials. I'm loving them. And if you guys have any questions, definitely let me know, right? So let's use these tools. Let's keep it simple, straight to the point. Let's continue to rock. Take care, family. I know I've been on here for a few, but man, it's just sometimes the sauce is too saucy. The sauce is too saucy. Like this right here, this would have been great as it. This is what I really like. I really like these situations where if you're in the, you already start to see that the market, look at the structures, they're going up. So as this market is really breaking higher, all of this resistance is just supported. But what I really like is when it pulls back, right? Because we can reference these points as potential areas. Reference that one, reference this one. So it eventually gives you a interest area to get in. And it's like, man, if you guys understand that, the strikers are cool, the pullbacks are great, but that's the only thing you got to really understand, because place that stop under that bad boy, and the first target is already 1-to-1. Next thing you know, if we take it to that next level of structure, that's already 2.5. Right? Look at that. It already hit that first level of structure. By the time it does that, and this is what's crazier, you got your buy set up right here. So it's like once you got your buy set up, you got your pullback. Oh, heck yeah, I'm taking that trade setup. Where am I placing stops? I'm not placing my stop down there. I'm going to place it real minimal. I could do a nice 40-pointer because it's already breaking to the upside. Make it make sense, right? As long as it makes sense, you're making money, right? Because them cents add up, and boom, look at that. First level of structure, 90 points, secured. Boom, right? Over here, we got the market. Now let's move structure to structure. By the time it hits the first structure, you're up 50. You don't need to have that whole risk. If you get stopped out, you're still in profit. Secure some partials and then trail to the next level. Boom. Secure your 80 points. I'm out of that trade, right? If you would have held your first trade setup, you would have added another 120 to that. If you're up 200 points, literally within the next 2 hours, I'm out. I'm done. Sayonara, right? So that's pretty much it, family. You know, it's not as complicated. The only thing I want to make sure you guys understand is some of the basics to getting in and out of the market, right? Like, look at this scenario right over here. You would have gotten your sell set up. That's great. You know, getting in for a sell, it moves a little bit, but then pulls back. I'm already aware if I see this, especially with the striker, I know that some pullback needs to happen. I need to be okay with understanding that the market, as long as it stays under that box in a bearish situation, that we're selling it. And if that's the opportunity, that's fine, right? What if you're getting in here? What if you're getting in here? Take it on down, right? And if I take it on down and it hits 50, it hits 70, I'm probably done with the trade setup because I know I'm minimizing my risk to maximize that setup. Look at that, it moves 140, right? Off of the setup itself, right? I know I need to have a bigger stop loss, right? It doesn't hit 50, so I would have been secured if I just keep that mentality, but it easily does a nice almost 2.5 to 1, 120 points, right? So that's where it all comes together. Not as complicated as you think, right? If you know where highs are, you know where the market's going. If you know where lows are, you know where you could take them. Right? If you know that this market has this point right here, and we're buying it from here, you know, hey, I gotta hit this level first, right? Look at some other good situations we had. You know? So. And let's see. If you guys have any questions, feel free, drop them in the chat. I'm literally just reviewing some of the stuff we have. It's not too complicated. I hope, you know, understand that pullbacks are necessary, but the first thing you always got to do is trade in the trend. Know what the trend is, because once you have a trend identification, you have a pullback determination. Look at that. Grab that high, grab that low. I got a nice pullback entry right in here. It literally kisses it and then gives me a sell setup. Heck yeah, I'm looking for that sell and I'm getting in there because I know that my stop loss can slightly be above it for 40 points. And the first place I'm taking it to is 1-to-1, which probably does a nice, look at that. It literally does 1-to-1 before pulling back again. And the crazy part about it, it pulls back right into an area of that support that now should be rejection. You see what I'm saying? So it literally doesn't come back into our area. Look at that. Beautiful. I would have literally, by the time it hits 1-to-1, minimize that risk, and then you can trail it. It ends up moving about 50.62, right? Like, let's look at these scenarios over here. This is right there. Yeah, it's still during New York session. Cool. Got the buy setup right there. Boom. In a bullish market. I'm taking it. Right? Why? Because I know that, first off, as this market is moving, right? Let's look at that buy setup. You see all of this rejection? It's casually what? Breaking higher than it, right? As the market's moving, you're always alert. Where is the lowest point? Where is the lowest point? What is happening to these points as the market's moving? It's gradually going up. So it's just a matter of time before it breaks up and wants to maybe go slightly higher than some highs, right? If we had any other highs, so it's a no-brainer. It takes out the high, right? Does a little trap, drops, traps again, and then makes its move, right? So once you're starting to see that, you're going to notice, oh man, if all of this was rejection, if that was rejection, I get the buy setup, I'm coming in. Guess what? Stop loss is under these lows, and I'm taking it first to 1-to-1. 25 points gets hit 1-to-1. I hit, if I want, I could do a 1.5 or 2, whatever you want. But trail, right? What's the best thing that happens? By the time you take, 40, 50 points, the market what comes back and stops you out? Well, guess what? You still are up in profit because the market, if it's going to continue moving, look, we got the next buy set up. And what's even better is we got a striker pullback entry. It's like, hey guys, we could get in, but best believe if you find a pullback, you can get in at a better point. So that buy entry would have been sauce. I would have placed it under this low, under that low. That's only 35 points, and taken that bad boy on up. Right? And realize, look, if it's 35 points, right when it hits 35, right there, I'm doing minimal risk. Boom, minimal, right? Because I understand I don't want it to come back. I don't want to secure all of that and it comes back. No, secure the bag. You see what I'm saying? Like let's go, let's come over here. Let's do some more. As you can see, I'm trading during the right time, right place. All right, so let's start off our right here. Right? Got your New York session. You literally would have kicked this market's behind starting it off already if you did a little earlier than New York. Because I have some members doing a little bit like during London into New York, seeing some good stuff with that. But what you notice is they're striking, killing it. All right. So what are some things that we learned? We learned that the market goes up, down, and sideways. But if it's going to go up, it needs to retrace, aka pullback. If we know that, we are always one step ahead because we know as long as it stays above that zone, no matter what it does at the zone, as long as it stays above it, I'm buying it. Point blank, period. And if you you don't even need to buy it at that point. This is just an opportunity for you to understand that, because as the market starts moving higher, you see all of that rejection. Did you just see what happened here? The market gave us the setup, but look, it pulled back. Hopefully, I'm making sense, because get them sense, it's gonna make some dollars. Look, it pulled back. Entry interest right here. Right? So already it's like if you would have already looked at that buy setup, you already know one thing. It's not. I'm going to repeat. It's not going to break this zone. First off, this right here is my reaction already. It shouldn't even break this low. It shouldn't break this low. In fact, this resistance should be supportive, and it doesn't even need to break that. Right? I learned that at the retest after, but like in the scenario that I'm looking at this buy setup, you could easily set 40 points. Easily do a 1-to-1, right? I don't know if it gets hit here, but whatever. By that time, you already know we're moving on up. As the market goes on higher, always be on alert for pullbacks. Pullbacks are the best, right? I always look at a pullback because I know the market, if it's going to go up, it's not going to want to break the low. So the closer you are to the low, the better. That's why you're getting on some retracements, right? So right here, ooh, this is a good one. This sell, yeah, I probably would have took the sell, I'll be honest. What would I have done? If I'm looking to take that sell, the first thing I'm going to do is I'm going to place my stop loss above the most recent high right there, right? That's about 30 points. And then I know the first place I got to take it to is even if I'm considering it, I got to take it first into structure, right? Boom, that's the move, right? It just happens to actually move a little bit more where it moves 40 points. But just so you guys see, find the setup, condition the market, make the move. If you notice right here, ooh, this would have been a beautiful setup. We got the striker. We know we're in a pullback territory. So what that means is you look to the left and you find these areas that were broken. And you notice that when that resistance gets broken and you're telling yourself you're supportive, and not only are you telling yourself you're supportive, but look, whip out those fibs, identify that zone of interest, because you already know if you're going to get in here, your stop loss is under here. And this is for those manual traders who are using these tools in a manual or even automated sense. But you already know stop loss under, and then we do what? Take it structure. By the time we hit structure 1, TP1, you minimize that risk and you let it ride. Boom, secured. At least you kept it now secured, right? But that's for those who understand what we've been doing right now. For those who are a little bit more basic, need some assistance, we got the buy setup that comes in. We would have placed our stop loss under, right? And been able to take that bad boy on up, right? It ends up moving about 70 points. Beautiful. Do you think I would have taken this buy setup right here? I am not. Why? Because first off, if you look at this buy setup, you got to realize the market needs to break higher, right? I understand that the market just made an extreme, whatever, 100-point move was that, right? It literally did 122. So I know pullbacks are always necessary, right? In fact, what's even crazier is I don't know if some people would have got this, but if you would have grabbed your low point, boom. If you would have grabbed your high point, boom. You would have understood that the market's just retracing. right? And this is where it's like, aside from using these tools, it's like, yeah, it's always great to know a little something, because if you know that it's retracing into this area, the first area it's going to go to is where? Structure. Ooh, right? Entry, exit, identify it. So those are always things to know. Where are the highs? Where are the lows? Right? Look, it hits that high point, and what do you think it literally did right after? Reacts, right? Where do you think it's gonna react to? Right? Structure down here. Let's take out some structure. But by that time, you already know. You already saw it. What did you see? Well, shoot. You saw either the striker, you saw either a setup, and you would have kept your stop loss, what, 40, 50 points minimal, taking that bad boy on down, ends up moving about 58. You see what I'm saying? So it's like, it's not that hard to secure 50 points, especially if you're right in the right conditions and you don't over leverage. That's the only thing. All right, look at this setup right here. This buy setup comes in, boom. All right, let's just look at one more day, because it's really as simple as that. You know, just apply some basic stuff. The videos, the training is more of that's going to be in the back office. Let's just do one more day here. Let's just look at some things. All right, so if you notice, the first setup right here came for the sell. That sell was very beautiful, actually. Right here. What was so beautiful about that sell? Well, let me actually replay it so you can see it. You see those, you're gonna see some structure levels. If you know where the structure is, they help you reference everything, right? So now that you got this sell that comes in, you know that the market's looking to what? Break these levels, right? Break these levels, has no business going above this point, right? Keep a 40, 50 point stop, keep it minimal. Why do I like to keep it at 40, 50 points? Well, you already know you're usually gonna move 50 to 100, right? It would have been even better doing like a 30-point stop, but I would have took in probably a nice 50. And what I'm going to do is I'm going to take it down into those structure levels, right? Reference them as targets. Know if you're going to reference a trade setup, know where you're going to take it to, right? And in this case, it's like by the time that this bad boy moves, look, it's already up. I think it did 100. Yep, it did 100. By the time it does 100, I'm out. I'm out. Do you think I'm looking at this buy set, the sell setup? No, because I know I already could have caught the better sell setup. I just needed to be alert. I need to be in the game, right? What am I looking for? As the market pulls back, some lows that get taken out. You know, by the time it's already down here, do you think I'm having risk? No, make it risk-free, right? Secure the bag, let it partial out, right? If you notice, look what it did. It actually, here, let me run that back. And that's why it's important to understand highs and lows, because look at this level of structure. Look what it literally does, right? Watch this. You get the sell set up, right? It actually hits that low. That's why it's like move into structure. And now that it took all those players out, now it's like, okay, well, let me create some momentum now, right? And it would actually be crazy. I was going to say that if the buy setup came up. But yeah, it's like literally just seeing how this market moves. It's just remarkable. You know, once you know that this low got taken out, and once you notice that all these buys, look at that. Look at this. All of that rejection just broke. Heck yeah, you think I'm going in on this? Heck yeah, I'm going in on that. I'm taking that buy setup. I'm placing my stop loss under where the market has never been. Keep it max 50, and I'm easily going to look into structures, right? And then once it hits 1-to-1, right? Once it hits 1-to-1, we could say, you know what? Let's keep that. Let's keep it at move that stop loss to break even. So where's 1-to-1 on 50 points? Probably the first level. 1-to-1 is right there. So once it hits that right there, I'm moving it risk-free. And I know it could possibly look to target highs, right? If it doesn't, well, guess what? It's going to hit me right here. It stopped me out, but I've still secured the bag, right? So those are all little things that we're looking out for. But you got to realize, it's like if you caught the first trade setup and it moved 100, if you caught this next setup that moved 60, already within your first 2-3 hours of trading, you might as well be done for the day. If you risked 50, you already did over 150. Yeah, that's 3-to-1. Yeah, come on, you know what I'm saying? So, all right, looks like we got some sell setups that are kicking in. All right, so if you notice, it's as long as it breaks under that, I'm good. All right, keep that risk minimal. We don't need to risk 90 if you're up. If you're up, keep it minimal. 40. I just like to make sure that my target is at least 2-to-1. By the time it moves 1-to-1, we move. All right. So right now, if you're noticing, the market's a little shaky, right? The market's just hitting these levels of structure. If you're not comfortable with it, minimize your risk, make it risk-free, right? Or simply get out, right? So this one's probably just gonna pull it back. Oh, it actually doesn't even pull back. Boom! That would have been great. That would have been a great situation, you know? So that's just little things to look out for. But I would have already been out of that bad boy. Ends up moving a lovely 70 points. All right, so the striker always striking, doing our thing. The alerts are going to come in smooth. Let's just see. Let's just take the last setup. Okay, oop, there it is. You see, it's like as long like you got to have a point that you tell yourself you're done. Like if you started the session at 4 o'clock in the morning doing some London work, right, and you saw that first setup at 100 points, I hope you would be done. Secure the bag at 1 hour of trading. If you came in, took the buy, caught 150 points, I'd say, listen, you're up 150, do a 0.5 on that. Yep, you're up about $750. I think you like that. Heck yeah. If you caught the next setup and you're up another 73, I would have said, listen, if you already traded for 3 hours and you made over 200 points, you're done. But if you would have wanted to take the last setup, let's just say, because this is just what you got to do sometimes. You got to get in your bag. 40-point stop loss. My first target is going to be, of course, looking into structure. Ooh, structure is 35. I probably would have minimized, did a 35. I like to do 1-to-1s at structure and then take it to the next level of structure. Let's see. Let's see how that trade setup does. Ooh, let's go. Let's go. If you would have been, I think by that time it's already up. Ooh, it actually hit 88 points. But if you're risking 35, that's already over 2.5-to-1. Right? So it's like, by that time, it's like, come on now. I just want you to hit that structure level for me one time. There you go. There you go. I was gonna say, like, come on, don't do me dirty like that. Like, come on now. So if I would have risked 35 points right there, at that point, my stop loss goes to risk free, and it does what it wants to do, right? I could either set some other partials at 50 points, 80 points. But look, that bad boy moves 170. This is a successful trading session using the exact same tools that I just referenced. 3 basic tools. 1 to know your trend, 1 to know a better entry, and 1 to actually get in. That's it. Let me see. Are you guys with me? Who's on here? Who's on here? Hold up. Give me 1 second, fam. It's crazy. It's already 12:26. Oh my goodness. But let me see if you guys are. For some reason, the comments aren't coming through. I don't know if I'm tripping. But it's fine. Yeah, it's really not that complicated. Yeah, let's do, should we do one more? Let me just do one more. Let's go to the previous day. And the crazy thing is, yeah, let's go to the previous day. Where we at right here? Where are we at right here? Let's go to the previous day. About 4 o'clock. Boom. All right, let's bring out the bad boys. All right, y'all. So let me show you guys. Let me give you guys the runners. So starting at front, we're going to bring out our pullback pips indicator. Our pullback pips is going to hold down the fort. This bad boy is going to guard the house, all right? Bearish, red, bullish, green. We're going to have our pullback structures identified so we know where the market is, the perimeter, right? Now we're going to have our first shooter to the force, right? We got our US 30 striker. You could use it on US 30, NAS 100, and at times gold, but best believe we're not going to be shot because we got our sniper coming back shooting some alerts, right? So now that we got all 3 of those, I just want to reference what's been happening here. All right, first off, I'll be honest, I would not have taken that alert. And the reason being is because I can almost guarantee you if I was up just maybe an hour before, I would have caught a better entry. And let me just put it to 3 o'clock. Yeah, you see that? You see that? I would have known. I knew that. I knew it. I knew it. I already knew that if there was already sellers in there taking it down to that structure, right? So that's already just to show you that, That setup right there would have been fire. And not only that, but look at this one. Fire. And let's look at the next one right after that. Fuego. Right? And let's look at this one. This one probably would have gotten stopped out. Nope, does not get stopped out on 50, does not get stopped out on 40, and we are good. All of them would have hit perfectly. Yes, yes, yes. Right? So let's just continue to dig because by that time you're probably trailing to the lows. That setup comes in. Right? Let me just see what's happening. Yo, these cells are coming in off the rip. Sheesh Louish. Here, let me do some. Those would have been saucy. Sauce in the cells. All right. Let's see. Not in yet. We're still in seller territory. These cells are coming in crazy. Yeah, this time is 6 o'clock. If you would have been trading earlier, you would have been done. Because that would have already been, sheesh, honestly, even coming in at 4, taking that first sell setup would have done 160. I should have. All right, let's just take this buy setup right there. Small risk it out. I think a stop loss of about 40 should do. We can easily do a nice 1-to-1, but we do have structures up top to take it to. Sheesh, Louish, that bad boy did something. All right, so let's see. I'm not liking the pullbacks, but it's doing what it wants to do. All right, so at this point, we're in a ugly situation. Yeah, this is just a choppy chop market. Yeah, it's 7 o'clock. Yeah, that was a small stop out. Small stop loss, nothing crazy. Let's see if we see anything else. We're in a seller's market. We got that sell set up, so let me see what we can do with it. If we're selling it, we're going to place our stop loss above market structure. We can do a nice 40 points. Our first level of structure should at least be that. We have structure there, but I'm going to take it into that 1-to-1 situation. Let's see, keeping that stop minimal. Okay. Boom! There we go. All right, so if you notice right there, we hit our 1-to-1. I'm okay. Just coming back on a break-even situation from that loss. You know, definitely secure some partials on that. Let it ride out. It looks like we're pushing about 80 points. Hits a nice 2-to-1. You know, at that point, I'm probably securing the bag. Right? Now, we did get another sell setup. So let me actually, dang it. I was moving too fast, talking too fast. But if you notice, heck yeah, we came into that sell. Don't play with me. That next sell setup actually did nice too. Don't tell me it's going to push for 100. Don't do it. Don't do it. Don't do it. Oh my gosh. Don't do it. Please don't. Don't do it. It did it. It did it. Right? So if you just saw, I don't know if you saw that. Am I showing my screen? Yes, I'm showing my screen. All right. So that first sell setup right there would have been sauce. That next sell setup, great. This one would have been even better, flowers. And even this last sell setup, it would have probably, I'll be honest. Why? Because it's a little high. But regardless, if you would have taken that with a small risk, it probably easily would have done 50 to 70 points and is packing. I'll be honest, I'm done with the session at this point. At this point, I am done. I am done. It's 9 o'clock. I am done. And the session hasn't even started. Look at this. Like it's okay to take a loss. That's what I want you guys to understand. It's okay to take a loss. Just keep it small. Right? Because when you catch the setup, look, this first setup, if I would have held it, it would have easily been a nice over 250 points. But it's okay. I understand. Dang. I want to do one more. I want to do one more, fam. I want to do one more. Just so you guys could see exactly like here. Matter of fact, let's just continue this session. I just want to do for giggles. I want to see what's happening. Oh my gosh. That sell was nice right there. Right, breaking that structure would have been beautiful, flawless. Ooh, we got, what time is this? Oh yeah, 9:30. All right, cool. So we got that sell setup. That sell setup did nice as well, man. We got some nice saucy sells coming in. 58, 150. Seller's market, like, come on. What is going on? I want to just see if the market ever ends up switching, but these sells just kick getting booty. Okay. All right. All right. All right. Yeah, it's just at this point it's 11 o'clock. Sellers all day have taken over. Like, yeah. Call it a day. Call it a day. Call it a day. Oh my gosh. Just imagine, right? Literally just starting that session a little bit early, right at 4, doing that 4 or 5 a.m. You would have caught some nice London peaches, pushing that bad boy down. You already saw how I took my small loss right here. But if you noticed, it was just a little consolidated. It's okay. Because right after that sell setup pushed, and I'm talking points, baby. Right? So let's just do one more day. We can go back, 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 back. Yes, I need an ugly day. Like if you notice, like here we could do. Yeah, let me actually. I need an ugly day. We could do these next 2 days, and then I'll be done. 100%, 100% sure. But let's take these serious. Serious, guys. Come on. What do you think? We're just gonna be buying and selling whenever we see the setups. Oh my gosh. All right. So I just wanted. We're gonna do a pregame warm up. A pregame warm up. Pregame warm up. All right. Pregame warm up. All right. All right. So just so you guys can see, these are the rules. Your striker, right? Let me give you guys the rules, and then we're done. The striker is going to alert you on 2 things, either potential entry or a potential pullback. What does a potential entry mean? You get in at the close and the identification of that. As you can see, it ends up pushing 50 points right off the rip. But if you understand the trend in the market, you understand the pullback in the market, you understand that the striker is alerting you on one of those 2 things, you know that as long as the market does not break lower, you are looking for those buys, retests to go higher, right? That's what the striker does. It alerts you, identifies you, gets you in the game. The pullback pips indicator is going to give you the trend. Now, you could do this on the 2-minute, the 3-minute. If you want, shoot, you could do it on your current time frame, but that's I just want you to realize it's better to see the bigger time frames. Right? So, last but not least, we have our alert system. It's going to help you identify your buys and your sells. But this is the only tool that you're using to get in. Right at that point, right? Don't wait for no pullbacks unless you get that striker letting you know something might be coming. Otherwise, if you get a sell in a seller's market and it looks good, I'm taking it, right? So like, for example, just look at some good scenarios. When you get a sell, you're going to place your stop loss above the highest point. It doesn't need to be hundreds of points, right? Above the highest point. Max out 50 points, right? So I would do about a nice 40 pointer. My first level of profits is usually right back into price. I call that structure right there. And right after that, if the market wants to clearly move and trend, because that is what it's doing, it will go a little bit lower. Boom. At 100 points and you risked 40, I think you would secure the bag on that. I could almost guarantee that, right? Especially as it did that and tested twice, right? So the buy comes in. What do you know? Past resistance turns into support, right? Feel me. If you got that buy set up and you're in a buyer's market, you know that now that the market has broken that, you can place your stop loss clearly below it, right? Now, clearly 70 points is a little too much in my book, so I'll do a nice 50, I'll do a nice 40, as long as it's closest to that low and it doesn't exceed 50. Why don't I exceed 50? Because more than likely, these nice pushes go for 50, 100 points, right? And if you notice, we did hit 100 right there. Secure that bag, I'm done, right? Now, honestly, by the time that happens, you actually start to encounter more about this market. What's more? Well, the resistance areas now become supportive, right? By the time that it hits, that nice 50, I probably would have been actually taken out on my stop loss to break even at 1-to-1. But nonetheless, guess what comes in? A setup alerting us to get in. And once that happens, stop loss what? Under the most recent lows, max 50, and then we could take it up. You already know how that goes, right? So that's where those buy setups come in, right? You buy in the buyer setups, you sell in the seller setups, and let's not complicate it, right? If the market, now let's be honest with ourselves, and this is why it's like, let's be honest, you don't need to be trading every day, every hour. Hit your goals, keep it moving. If you want, you're going to probably give it back to the market, right? if this market, if you caught some crazy entries right here, or even the next one that came in right there, right? Eventually, there's a point that your stop loss at break even goes for over 100, well, ooh, 300 points. Golly, right? 100, yeah, 100 easy 100-point wins, right? What you got to realize is from your first entry all the way up there, that's over 400 points, right? And if you started at 9:30, right, just because by the time that is 12, you should be done with your day, right? I'm just letting you know. I'm just saying it. Even though, and I'm going to say this one right here. I'm going to say this one right here. Listen. That sell was nasty in July 1st. Oh, we're going to go back. We're like right now, I'll probably be on here just for a few, just because this is what I love. I love applying these tools that they don't repaint. So when they close, they close. So you're gonna notice like crazy sauce. Let's get on here. Let's just get back. Let's get back. Here, you guys can see my screen. All right, cool. So if you notice that, all you gotta understand is the highs, the lows, right? The highs, the lows, right? And eventually the market's gonna do what? Consolidate. What is this? This is consolidation. If the market moved already 300, 400 points and you're not done with the day, you need to be patient with the day. You need to understand that consolidation is part of a market condition, right? And if you could at least be patient to it, you'll find the next opportunity with it, right? You saw how those sells came in nasty. Even if you waited, right? Even if you said, you know what, this is what I see, this is consolidation, best believe you still would have caught a nasty sell-off right on that pullback, right on this pullback, especially if you knew that you were in a seller's market. You see how it all makes sense? How especially if you knew that you would have been striking for some sells that were coming in, and especially if you knew that you got the alert that said, you know what, get ready because we're going to sell. And if you knew all of that, plus, let me add the plus, if you knew that we were coming from a potential, here, let me sweep of this high point, of this high point, and potentially even this high point, because that's what it did. The market literally came up into those highs, took it out, and now created momentum. You see the pullback? Momentum, right? So if you can put those things together, oh man, it's so much easier to see. And if you got the patience for it, you know you're going to be in the game. It's crazy because it's like one of our members literally has been posting his profits like every single day, and I'm just like, man, he's doing his thing. So it's like I need to literally do my thing with y'all. Like I'm over here just hitting basic goals. Nah, it's time to turn it up now. I'm like, I had to tell developers it's game time. Let's get this out. That's why I'm doing it. I'm like, man, I'm not gonna wait no more time. That sell would have been nasty. This sell right here at the break would have been nasty. Look at this sell. Even that sell would have been nasty. Place here, what? My 50-point stop. And guess what? I'm easily pushing that bad boy down 150 points. You already know I'll probably take my profits and at 100 and trail that bad boy, you know, when the time comes. You know the deal. But look, this would have been a successful day. So let's just do one more, because everything closes and prints. It's not going to repaint, right? And the crazy part is if you would have came in a little earlier, 5 o'clock, you would have caught that sell. And, you would have caught that sell. You probably would have been done. All right. Oh, wait, we were actually doing a back test. Yeah, right here. There we go. Let's do some. Here we go. Let's go. That was just the warm-up. I forgot about that. All right, so let's see. We got the first sell setup that comes in. I need to take some losses, right? So that means I want you guys to understand how to just be emotional. I mean, non-emotional, zero emotion, right? So if you would have taken that sell at the close of that candle, it does move 30 points. That's fine. I want to just take it into structure, and I'm going to just let's do a nice 50-pointer. All right. All right, so we're in game time. You understood the rules. You saw how we applied it. Let's do it in hand, right? All right, so okay, stopped out. Why did I not like this at first? Because if you notice, if we're in a seller's market, you want to sell when the market breaks these lows. For some reason, this sell it got me a little sketchy because the market created a lot of momentum right after that. Right, all that momentum right before, but it's okay. Let's continue the day. It's only 3:30. All right, so we're in a buyer's market. We just got our buyers set up. Ooh, this is good. Let's see. So we just came off a loss. Shake it off. You're not over leveraging. When you're risking about 50 points, you can do about a point. A point. It depends on your account size, but if you're doing a 100K funded account and you're risking $250, which is like a fourth of a percent, you can still keep a solid 0.5 and do good. Oh, let me place my stop loss under for 50 points. We can do 40. 40 shouldn't be too bad. But what I do, ooh, this is actually something I don't like. I don't like that all of this. You see, I might have to give it the fluff, give it the 50 pointer just to put it under that mess. Yeah. All right, let's see what it does. All right, so the market stops us out. Oh, it does. That's fine. That's part of the game. There we go. Right? I'm still visualizing as this is happening. Structured highs, lows, where it could go to. Right? So for right now, we're still in the bullish market, so I'm ignoring all this. Ooh, this is actually pretty much interesting to me because it's breaking structures to the high. I feel like the buy setup should be coming in. Come on. Dang, you waited all of that time. Oh, it came in right there. There it goes. So let me come in on the buy. Right? Now, one thing I got to realize is where these lows are at. So the first buy came in right there. Boom. I'm going to place my stop loss at these lows, 40, 50 points. I'm not going to do exceedingly a lot, right? Because you're going to notice these moves, even if we did a 50 pointer structure right there, 70, and then we could take it for 120. What you got to realize is as these markets move, like for example, right there, I'm just still waiting, letting it marinate, boom. Where's my 50 points? Because you already know what happens at 50 for me. Once it hits 1-to-1, I secure some partials, make it risk-free, right? If you're still emotional about those two losses, sorry for you, man, because I'm still looking to take these bad boys into these highs. We just got this buy setup that's kicking in. So let's see it just go higher if possible. It's chilling, it's chilling, it's chilling, it's chilling, it's chilling, it's chilling like a chameleon. By the time it switches, I would have gotten out. We did end up hitting, 100. So yes, I would have secured that. Some good milestones to secure some profits. 1-to-1, 2-to-1, 3-to-1, right? What's next? Nothing's next on this. Nothing. We're in a bearish market. Let's see if we get some sells. Oh, there we go. We got a sell. All right, so the sell came in at the close of this candle right there. We're going to already do our 40, 50 point stops. And we're going to take it first into structure. That structure is a little too low. But realize if it can push all the way down there, I would love it, right? So keep it minimal. Let's see what it does. Chilling. Okay, here we go. All right. So if you notice, this is always important. When I say you got to give it 40, 50 points, you got to give it to it. Because when you're looking at the market, you always got to notice where are these high points at? Because that's where people are placing their stops. And if you can at least give it a little cushion, you avoid being swept. Like right here, it swept those highs, and then it eventually created that low. Right now, it literally is just in the process of actually taking some lows. I'm curious, boom, it broke it, yeah. By that time, if we're risking 50, you know what I'm doing at 50 points. Did it hit it? Yeah, it hit 50 points. Securing that, make it risk-free, keep it moving, keep it moving. We're in a bullish market here, so since we're in a bullish market, you know what I'm looking for? Buy setups, and I want to confirm it with the market. All right, so we're in the seller's market, and we got the sell. So let me place that sell. Boom. Let me place my stop loss. I'm going to do a nice 50 pointer. If you're not feeling it, use smaller risk. The 1-to-1 already hits that structure, so you got to take it. You got to take it. All right. We got stopped out, but we did get a buy setup that I'm liking. Right. And this is actually a good situation because we did get a lot. We have taken a few losses. We have taken a few wins, but I want you to see overall what happens at the end. Right. So we place our stops 40, 50 points at these lows, and we're going to be looking to touch structure. Right. As long as the market is in our favor, we're looking to buy. If it's looking to sell, we're selling. All right. Market's just chilling. It's 9:30. A lot of wick action. That was a close one, but still nada. All right. So it looks like already we got a nice. There we go. Highs got taken out. Boom. Smashed. 160 points. Me personally, you already know the deal. At 50 points, I would have moved my pointers to stop, break even, and kept it moving. All right. Now let's see. Let's just finish out this session. We got the buy setup that comes in. I'm looking at it. And one thing I'm telling myself is, dang, this bad boy already moved hundreds of points. If I'm coming in at this buy, guess what? I got to keep my risk minimal, right? First target is going to be 35. If we can push higher, that will be great, right? Now, if you notice, it did actually hit our first target. Boom. And that's why it's like, man, keep it so legit that you know your rules. Go 1-to-1, move your profits to stop loss to break even. I think that's probably going to be the last thing, a trade manager, a good lethal trade manager. So we got our sells, especially for indices. I know sometimes the trade managers get a little different when it gets to indices. Now this situation, this one would have been a pretty close one. Let's just see if we get stopped out. Nah, we do get the other sell though that kicks in. Nice. Seller's market gave us some good pushing. I always want to make sure just where my highs are at. If you got to use a bigger risk, for example, if you see that your high is at literally 50 points and you want to give it, 60, 70 points, just use smaller lots. If you see your 1-to-1 is 58, you want to go 58, right? If you see that you want to give it some space, do some 70. I look at my highs. That's as a good reference. Look at your highs, the most recent highs, and just make sure that if the market pulls back, it can't take you out, right? So like with this one right here, push that bad boy above where it's 50 points. The reason I like 50 points is because we got a lot of traction. Look at all of that support that could be resistance. Let's see if it moves. All right, so it actually does end up moving 1-to-1. Where you at? Hold up. 50, yeah, that 50 pointer, that 1-to-1 is usually my sweet spot. Make it risk free. This 66, did it end up going? It actually ended up going 100 points, but did it go 66? Boom, yes sir. Right? Secure partials. Understand that. All right, we are in a buy market, and I thought that buy came up. Boom. When the buy came up and we turned green, guess what I'm doing? I'm buying it, but I'm also understanding we just broke this structure level. Bang, right? My stop loss is going to be under that mess, right? If in this case, I would have to give it a little bit more of a cushion because 50 points is right on it, right? That last candle, that entry candle was too strong. So I might have to give it 60 points and say, you know what, instead of a 0.4, I'll do a 0.3 just so it adds up. But I'm still looking to take my targets into some highs, right? I don't think it's going to go extremely all the way up for 300 points because that's the next level, but just take it 1-to-1, 2-to-1 trail, right? So like right here, you see how it already did? Where's the 60? Right there. Boom. That was the 1-to-1. At that point, partial it out, risk free, and let it continue if that's the case. If not, guess what? We're going to get another setup. I got my zone right there that I'm still watching because I want it to be supportive. The low is right there, so I just got to give it some space. Keep it below the lows and see if we could push into some highs. I don't like to do too much stacking, right? I don't like to do too much stacking. So like this right here, we would have gone stopped out. Let's see. We're in a seller's market. All right, so we got that buy right here on the bullish confirmation. Stop loss under this low. We could do 60. And 1-to-1 is 80 points. That's cool beans. Let's see. All right, so I think it actually did hit that structure level. So by the time it does that, guess what? Securing most of that profit, moving it risk-free, letting the market do its thing. You got to be so systematic. What are we looking for? Nothing yet, nothing yet. We're in a seller's market. Well, just waiting. All right, boom, we got our buys. So now that we got the buys, we already know at the close of that candle, we get the alert. We're going to place our stop loss. Boom, 50 points. We're looking to take it up into structure highs. All right, let's see. All right, it already did 1-to-1 right there at 50 points. So once it does that, make it risk-free. You know, if it wants to take off like it just did, guess what? You're able to trail, secure the bag at 2-to-1, 3-to-1, 4-to-1, right? I'm going to give you guys all the sauce. But you already know you're looking to what? Target this bad boy into these structure levels. I'll be honest, I don't even know how I did these last couple trades, but if this bad boy moved 150 points, I'm definitely securing that bag. All right, a nice 3-to-1 would have been solid. So I know it's going to go higher. I was just going to say that. I know it wants to go higher because we're still in the bullish market. But this is just, you know, you seeing what the market's doing and realizing it's like, shoot, this was a little bit of a choppy day, but let's actually do the math. Let's just do some math. All right, so we took 2 losses, negative 100 points. This one moves for 100. We got a 50-pointer, minus 50, back at 0. 50, 50, that's 100. We got a 64 plus 50, that's 220. 210 plus 60, 270. Minus 60, back to 210. Plus 70, 280, and 150. 430. So 430 points. It's like, I know some of them got partialed out, but let's be honest, if you're still up 430 points for the day, you should be in profit using these tools. So I appreciate it. I definitely appreciate it when you guys in the community post your profits. You know, it really shows that you guys are using these services, using these tools, you know. We got members in the trade talk dropping sauce, you know, literally, look at that. Using these tools, catching the moves, because it's just going to continue getting better from here. So, family, I appreciate everybody on this call. I know it was a little longer than expected, but so pretty much, yeah. When it comes to US 30, definitely aim for 100 points. You know, that's definitely a good sweet spot, that 100-point area, because what happens is once the market usually breaks the structure, you like a 20, 50-point move. And then usually once that 100-point comes in, it takes highs and lows, it's going to, so it's like secure the bag. Me personally, the reason I use it on the 1 minute is the striker and the alert system work very well on the 1 minute. And it allows you to be in the game throughout that session. You know, as an intraday trader, I have some members who are literally just coming in within a few hours, able to hit their goals. And that's what I want. I'd rather be stuck in a trade for an hour rather than 10 hours. I'd rather be stuck in a trade 15 minutes rather than, 3 hours. So that's what all of these tools are here for. Now, I do trade Forex, and that's where everything first originally started. But as you learn, like, the next phase is making sure that not only people are seeing these great results, but now showing that if you do it with the right prop firms, you can get the proper funding and elevate. Like let's think about this. And this is my closing thought. I showed you guys the tools that are working great. I showed you guys the training that's here to help you elevate. And now the game plan is simple. If you have a system that's working, if people are getting the great results that's needed, now you just need to find the money. The problem is people don't have the money. The problem is 70% of Americans only have $1,000 to their bank account after expenses. on a monthly base. So after they pay their rent, their bills, their utilities, they have less than $1,000. If that's the case, if you just have 1,000, best case scenario, and you put that in the bank, you're not going to make anything. You grab that $1,000 and you say, you know what? I want to learn how to trade Forex. I'm going to join this company, that company. It's probably what, $100, $200, $300, $500, $1,000 to join, whatever the cost is. You still got to fund your account. When I first started trading, the problem was prop firms didn't exist. So you would trade your $100 account, your $500 account, trying to flip it. But if that's the case, you're really not putting the right thoughts and the right ideology of trading into your mind. You're actually just flipping an account, over leveraging. So what these tools help you do is now, if you got the $1,000, even $500, even $200, rather than trading a $200 or a $500 account, use that with a prop firm, right? If you got the skills and the tools to be skilled, now prove it with the prop firm. So that's actually going to be the next phase that we're going to do within the community. I know I have a few members already doing their challenges, but that's the main goal. Because let's just say if you get $500 and you pay for a $100,000 account or a $50,000 account, whatever the cost is, and you do 10%, right? Like, I'm not sure. Check this out. This is what's crazy. This is what's crazy. Hey, boss. I asked him, I'm like, hey, I see that you're doing great with the indicators. How's the striker and pullback been treating you? They literally said, very nice. Did a very comfortable 4.2% in 7 trading days, right? 4.2% in 7 trading days. So that's easily saying that you can do 10% a month. So if you can do 10% a month, and I have another member who's doing 10% a month, they're not even talking much because they're doing it. Now you can get a prop firm, and if you do 10% of that 50,000, if you do 10% of that 100,000, if you do 10% of a 200K account, and you're getting paid 80%, bigger goals, bigger numbers, bigger moves. So I'll be honest, family, I know I've been in the ghost. I've really just been working on these tools, these services, getting this platform together, because once all of that is done, we're going to just focus in on getting everybody these funded accounts, continue to grow, and just continue to elevate. So I just want to show you guys pre-launch vibes in full effect. Striker doing his thing. Alerts going crazy. And Pullback Pips has always been holding it down. Much love, family. I'll see you guys on the next one.